The whole banking system of China is on the verge of going bankrupt. Lately, China's economy has tumbled because of outgoing signs that have revealed that the Chinese economy may currently be in a downturn. You ought to realize that the nation is being hit by cutbacks, record high inflation, deceitful movement, trillions of dollars vanishing within the twinkle of an eye, and even more unfavorable happenings. Those emergencies are not good for the economy. How can they rescue the situation? Well, you might believe it's an overall emergency influencing the nation, but this train emergency is surprisingly more dreadful. China has figured out how to maneuver itself into a position where it can escape without experiencing in excess of a couple of declination to the gross domestic product. What will the result be if things continue to go this way? Indeed, the Chinese Socialist Coalition has endeavored to control the disaster, but the reality says that people have already been aware of what is happening. In this video, we're going to explain China's train debt crisis and how it's become a major problem that daunts the country. So watch the video to the end because it will be interesting. Now, in 2008, China originally left on a high-speed rail project, and they ended the first project in 2009. By then, the organization's most significant distance high-speed rail administration covered the 968 kilometers Wuhan and Guangzhou. This area covered has a typical speed of 300 kilometers each hour. China used to be an enormous exchange partner, but as things went on, the worldwide market and the exchanging projects took an unpleasant turn for China. These issues left a large number of individuals working in imports and exports, coupled with a few different businesses, to become jobless. Instead of them to figure out the exact method to disperse government improvement packages, the government of China chose to send off a massive infrastructure project, which is High-Speed Train Project. This framework project filled in as the Chinese Communist Party's efficient reaction to the worldwide financial crisis. While we have a substantial amount of double-digit stoppages, they are still insignificant reduction signs. In the 2008 downturn, U.S. home sales slowed down by 50% yearly. However, there's a trick. The major reason behind China's economic data isn't that terrifying, in that the data is always controlled. Recent leaks have shown that the CCP is controlling Chinese financial data. Behind the fabricated numbers, the whole Chinese banking system is self-destructing. As indicated by 6 unknown Chinese bank executives, government-owned banks have been giving out loans freely. The public government-owned banks are also giving out loans with a similar interest rate, just like the bank's deposits. This fall does not just come all at once. It began with a record crash in Chinese stocks on Wall Street. No one thought it would hit the country this hard, but it can only get crazier from there. The $1 trillion sell-off ignited by Beijing's shock ban on profits at tutoring companies has brought about a new round of soul-searching about the investment case for Chinese assets. After a week of wild market tense swings and calls with clients, those who had already invested suddenly decided that China wasn't worth the whole stress. Others spotted buying opportunities after valuations sank to the lowest level in decades. Now, since its inception, China's multi-billion-dollar railway plan has provoked complaints. They claim it's too expensive for a country where millions of people still live in abject poverty. Railway officials seem to have diverted too much money to high-speed rail and should be expanding lower-cost traditional rail. The replacement of slower lines with more expensive high-speed trains has prompted complaints from passengers who still pay higher fares, especially on shorter routes. This has led to growing investments in polluting freight road trucks and trailers offsetting. To recover from this fall, China re-engineered its railway infrastructure to drive the demand for concrete and steel, create millions of jobs, and put all those who had lost their jobs back to work. When things were not working as planned, the government had to figure out a way to make it seem like the credit market was booming. Of course, it is technically legal to execute this manipulation since the artificial lending is created by the CCP, who literally makes the law. Another strategy of the CCP is lending money to themselves. China's banks are using this strategy to boost loan activity for free. Now, CCP has been forced to manipulate data simply because no one is willing to take out loans. The People's Bank of China recently caught 4 key policy interest rates to boost the economy. In addition, the PBOC also cut its one-year loan prime rate for the second time in 2022. Chinese authorities are also planning to give property developers special loans worth $29.2 billion. This is on top of China's existing $145 billion property fund. As luxurious and efficient as the trains might be, most Chinese citizens consider the ticket prices exorbitantly high. This is purely against what should have happened, as rail should be as cheap or even cheaper than road transport. Imagine China being the world's second largest economy in gross domestic product. However, it's so unfortunate that most of its citizens are still relatively poor, with an estimated per capita income of $4,300, which is way below the world average. How can we talk about the high-speed train network in China without mentioning corruption? No way! What began with the firing and detention of the country's top railway official has spiraled into a corruption investigation that has raised questions about the project's future. With the vast spending connected with rail, expansion has also been blamed on corruption. Even if we try to address all these underlying issues, we're still going to have some unpalatable happenings regarding China's economy due to its colossal train debt. Let's see what comes out of it, because we can't say what this damage will further cost the country. Well, that's it for today, guys. If you enjoyed the video, do well to subscribe to this channel and do give this video a like. Thanks for watching. We'll see you in the next video.